right, I think we should be live here. Just make sure I got things running correctly. All right. Disclosure, I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here, just nothing new compared to yesterday's meeting. Market did not really do very much today, which perfectly meets our expectations. I can discuss all that here in a minute. So let's hop over to our charts. Let me get rid of this one and let me expand this one for us. Usually I do this before I turn the stream on. All right. So how did we close? The S&P closed up 0.2%. NASDAQ is flat. And IWM is where our relative strength is, albeit in a smaller way today, 0.3%. Let's take a look at the technicals. So we got a green market across the board. I had a green day across the board. Well, not across the board. Some of my positions were down. But another green day here on the week. Really tight trading action. Look at this daily candle from yesterday. I gotta make myself bigger. Sorry. Look at this daily candle from yesterday, and look at the daily candle from today. Very, very tight ranges, right? Look at the 5-minute chart of the SPYs, the S&P, the last couple of trading sessions. This is yesterday. This is today. Really, ever since the back half of Monday, which was a pretty strong trading session, we have just been doing nothing and going sideways. And I'll tell you why that's good and why it's bullish. It's because you had these 3 huge up days in a row. We discussed this the last couple of meetings. We went from short-term oversold, not in a huge way, but oversold, to short-term overbought in 3 days. When markets have really big moves in short periods of time, they need to correct by going sideways or by having a pullback. Going sideways, which is basically how you form a bull flag, is typically more bullish than an actual price correction, because it represents the buyers actually coming in and holding up as you deplete overhead supply over time, which is what the supply and dynamics are behind basically a bull flag, right? So a bull flag, you have a big move higher, you run into overhead supply, and because of the degree of the big move, the demand is sometimes not quite as strong, but in that bull flag there is steady demand. That's why it holds up. The demand runs into the supply. Over time, that demand eats away at that overhead supply, profit takers, whatever, and then you get upside continuation. One of the interesting things that, and it's part of the reason why, excuse me, it's part of the reason why I stuck with my TQQQ short. I did not get stopped out of that. I really only meant to put this on as like a short-term trade into the close 2 trading sessions ago, and here I am still not stopped out of it. And that's because there hasn't been any real upside continuation, and the Qs, you can see the Qs here. The Qs have been more extended than the S&P is. But the reason why I've been kind of keeping that position on is, again, the degree of the move, the degree of the extension, but also I thought it was pretty interesting in Pat's morning note this morning, which is a big part of my research. So Pat posted a morning note into the ProDesk virtual trading floor every day at 8:30 a.m. It's really big picture, high level stuff, and it's all about positioning and sentiment. And one of the statistics that came from this morning's morning note from Pat that I thought was of particular interest came out of the Goldman Sachs Prime desk, which basically said, and Pat, maybe you can correct me if I say this incorrectly, but what did it say? That there's a very large percentage of the sales in that down move were short sales, basically, right? 10 to 1. 10 to 1. It's 10 to 1 out of the sales were short sales into this move. So this down move here, you had a lot of funds reduce exposure and get short. And a lot of that shorting could be, also reducing exposure, right? They've got long positions on, so they're putting short positions on as well, which, just makes them less net long. I'm not necessarily saying that statistical information is telling us that the funds were getting net short, But what we do know is if you're putting shorts on, whether they're hedges or otherwise, into this down move, and then you get this explosive 3-day up move to all-time highs, some of that must be coming from a little short squeeze of people, of the funds who were shorting here. So that actually made me think that it was more likely that we would see a price correction back down to this 80 EMA. Again, the space between the 8 and 21 EMA is a space that I generally consider to be technical equilibrium for any stock or market that I'm looking at. So when the market gets extended to the upside or extended to the downside away from it, at a certain point, we can expect some sort of snapback or correction. There's two ways in which an extended market can correct. One is through price and one is through time. Let's just go to the TQQQ right now because I'm in it and it's a little bit more extended. Just use this as an example. So you can really see here, market price action is at 143.50. The 80 EMA is at 138.79. The 21 EMA is at 135.75 or so. So we are extended from equilibrium. We are extended from the upper band of equilibrium as represented by the 80 EMA on the daily chart by about $4 or $5, right? So when you have that extension, there's a couple things that we need to know. First of all, an extended market can always become even more extended. And this in particular is a leveraged ETF, so that can become even more extended. And extended markets tend to become more extended, especially when there's news or heavy volume. It's like what we saw in AMD back here when we were shorting it. You could have made the correct argument that AMD was overextended at 105. And then AMD was even more extended at 110. And then AMD was more extended at 122. So an extended market can always become more extended. One of my favorite examples of an extended market becoming more extended of kind of recent history is JKS at the end of last year, which I guess we're approaching a year ago now. So late September, early October, this JKS move was just completely insane. So this is why we don't want to come in and just, blindly short the market. Because you're like, oh, JKS is up too much. It's at $33 when it was just at, $21 like a week ago. And the next thing you know, it's up too much. It's because it's at 45. It's up too much because it's at 62.50. It's up too much because it's at $90 is finally when you get an actual pullback on, again, maximizing volume. So we know that those tops usually do occur at maximizing at the most highest level of volume when you actually have that degree of extension. But volume is also relative because you could have looked at these days back here, not knowing the future, obviously. You could have looked at these days right here and been like, oh my God, the volume is so big on this day, September 23rd, the top has got to be coming in today or tomorrow. And then just goes and goes and goes and goes and goes. So extended markets can always become more extended, but eventually they cannot continue at this rate. Eventually they have to have a price correction or a time correction where they go sideways. And that applies on all different time frames. So when you're looking at the SPYs right now or the Qs right now, and you see them 2 trading sessions ago, like, okay, we're a little bit extended. Market's at 448, ADMA's at 443. We're extended by $5 in a $400 ETF. That's not a lot. I think I mentioned when we were talking about the BABA downside extension the other day, that when I'm seeing extension that is like 10% or more away from the 80 EMA, that's something that is really extended as far as I'm concerned, kind of on a percentage basis. And the SPYs, obviously, were nowhere near that. But the other thing that we wanted to keep in mind was, yeah, fine, we're a little bit extended to the upside, but we were literally just 2 days ago a little bit extended to the downside. So it's a big move. So I was expecting more of a price correction than a time correction, and I even thought today we might see that price correction a little bit more, particularly with that information that we saw out of Goldman, that a lot of this was short selling, which implies that the degree and speed of this bounce back up could be short covering, which means that once the shorts are covered, maybe that same buying power isn't there anymore and the market actually price corrects. It's not what we saw. That's the thought process, that was the logic behind the thinking, but all we've done is really go sideways. The SPYs had another boring, tight day where we basically went sideways. The Qs had another boring, tight day where we basically went sideways. And the IWM actually gave some even further continuation. This is where the relative strength was. Got extended into resistance. I didn't short the IWM today, But extension into resistance is a trade that I like because you have multiple layers of probability on your side. Not only is it resistance, but you have extension into that resistance. So the extension into that resistance can actually give you a better risk reward on the short than you would otherwise. So to go back to the S&P real quick, just as a final note on this, as we go sideways here, which we've now done for 2.5 days, yeah, it creates for boring price action for the S&P that is bullish. Because like I said earlier, you're slowly depleting away at that overhead supply, and at a certain point, as those moving averages catch up, because you're time correcting, that usually increases demand right as supply is getting thinner, and then you get the next leg higher. So that's like literally the definition of how a bull flag works from the supply and demand perspective, which, by the way, for anybody who is a trader, which is everyone listening, it is not enough, in my opinion, to memorize chart patterns. I think that technical analysis, as it's associated with chart pattern memorization, that's totally wrong. If trading was as easy as just memorizing what chart patterns look like, everybody would be a bajillionaire. It's not about just understanding what a chart pattern looks like, but you have to understand the supply and demand implications of each pattern that you're looking at, and you have to recognize also that every single pattern is actually a little bit unique from every single other pattern because the other circumstances are always going to be different. It's a different company, it's a different market, there's different price action leading into it. So really what you're doing when you're implementing technical analysis in the market, it's like, yeah, here's a bull flag, but you got to understand what are the other circumstances around that bull flag. What is the market doing? Where's the relative strength? Where's the relative weakness? What's the degree of extension? Where are we in terms of market cycles? Are we in an earnings season? Are we outside of earnings season? Is it the end of August when price action tends to be a little bit slower, or is it a different time of the year? Maybe the end of the year could be a little bit of a different environment as well. So those are the things that we want to think about. The big picture game plan that I had, and the big picture game plan that we had established for the team this morning was to once again have a less is more approach because of where the market is. The market being a little bit extended plus that information, to me that meant I did not want to do a lot of aggressive buying, but I also don't want to do a lot of aggressive short selling because it's a bull market that's sitting at all-time highs. And I almost would have welcomed getting stopped out of that T triple Q short today. But it didn't happen, so I'm going to stick with the trade till the end of it, and I was able to trade it back and forth today, and even though it was actually against me on a swing basis, I still finished positive in it because of the kind of back and forth trading I did a little bit in that range. So the other part of the game plan was, even though we're trying specifically to not trade stocks that are heavily correlated to the market, we are still looking for stocks that can trade independently to the market because they've got news, or they have some sort of event, or they got volume, or they got option flow, or something like that that's coming in. And we did see a lot of bullish option flow hitting the market today. My best name on the day from a trading perspective was AMC. AMC was actually also relatively boring compared to yesterday. It's a decent sized range, but relatively boring compared to yesterday. I was kind of just trading this back and forth with light size, but the range was wide enough that it was able to pay me pretty well, and I had one pretty good short here back off this $48 that paid me pretty well. So that was my most profitable stock on the day. My best P&L on the day was an AMC, so I'll stick with my game plan on that. I'm trying to think here if we had anything else that was like in our morning meeting game plan, or anything else that was particularly impressive today. And honestly, most of the speculative stocks that we were really looking at yesterday to give us some sort of potential continuation, a lot of those things took a break today, which is totally fine. VLDR was brought up this morning in the morning meeting. I liked the daily chart setup here, even though it's in these moving averages, which means I usually don't like it as much. This is just another one of these super beaten up speculative names. Caught a big bid, a huge volume 2 trading sessions ago with a tight inside day. So I thought that maybe this would be a decent one. And the opening volume was good, but the opening candle shape was not. So I ended up never getting involved in it, and then it actually woke up and started to go. So I know some of you guys in the team were involved in this and made a little bit of money on it, even though it eventually rolled over into nothingness. I didn't like the lack of consistency in the volume. I wanted the consistency of the volume to be bigger in this VLDR, which is one of the things that I was talking about in real time, as opposed to 2 trading sessions ago when it really had that strong Maribozu day. Look at the volume here, especially in the beginning of the day. The consistency of this volume here in the beginning of the day was really what I wanted to see in this thing here today. And when I wasn't seeing that pretty quickly, like look at that second inside 5, granted it's an inside bar, so it should be on lower volume, I just said, you know, probably not going to go to this one today. You know, we can keep an eye on it for another day. And that's basically it. You know, I had a pretty late night last night, so I'm actually a little bit glad that the market wasn't too insane, so I didn't have to be too on point today for a less is more type of trading session, which is fine. It was a good time last night meeting up with a couple older traders of mine, and that's really all I got for you guys today, which I know is not too much. So I'm happy to answer any questions. What's Snow doing here after hours? Snow is down about 1.5% here after hours on its numbers. Salesforce came out also. I didn't know Salesforce was reporting today. CRM is up. CRM's up 1.5%. Not huge move. So we'll take a look at Snow, and we'll take a look at CRM tomorrow. Mr. H here in the VTF is asking me about TCAT. What is this? Takung Art Co. Oh, is this one of the NFT stocks? Yeah, it looks like it based on the volume. I'm pretty sure this is one of the NFT stocks. Somebody correct me if I'm wrong. Did Playboy move today? Playboy is another one of these NFT stocks. It blows my mind that Playboy, which was a SPAC, is able to hold up as a $24 stock. We like to make fun of Brandt here in the VTF as being the only guy who still has a magazine subscription for the articles. But yeah, I mean the NFT space, there's been a lot of speculation around it. So that's what this TCAT is. So it just moved on news. You know, $8 or so is a little bit of a breakout on it. Big volume yesterday, continuation of big volume today. I mean, it's just pure speculation. It was not on my radar, so I really don't have much to say about it. I'm not bullish on the NFT space. I know it's been hot. I know some people who have done pretty well for themselves actually doing some NFT flipping. So maybe I'm missing out. Maybe I'm just a boomer over here who doesn't know what's going on. But I honestly don't have too much of an opinion on this or on Playboy. It blows my mind that Playboy is able to hold up where it is. Marty asking me about S. Wow, nice 4-day move on this S here. That $55 was a pretty solid level that it was able to close above yesterday. Friday I hesitated from buying a small starter position. I'm hesitating lately, second guessing myself. The setup was perfect and I froze. It's up 25% since then. Advice. Sure. So what's today? Wednesday, Tuesday, Monday. So Friday was this tighter inside day, and Friday is when it kind of broke resistance 1 at $50. And I remember this IPO being an interesting company, and saying to myself that this was a company that I want to keep on my radar for going forward. I don't think I've ever actually traded it, so I don't know how it actually trades from a liquidity perspective. But yeah, you know, beautiful 4 or 5 day up move here, and it looks like you were looking at it at exactly the right day and the right time into this $50 area, and then set up again, honestly, for a trade on Monday with the inside day and up. So I think that you had an opportunity to be involved in this thing on Friday when you're talking about it through 50, and then you had probably an even better opportunity to be involved in this thing on Monday when it was already starting to break out and it broke the inside day to the upside. So you hesitated on it. You wanted to have that smaller starter position. You didn't pull the trigger. I get it. You know, putting on that initial risk can definitely be difficult mentally, because when you're putting on initial risk, you have the potential of losing money. And it's easy to second guess yourself. I think that, you know, my answer to all of these issues, all of these types of issues, which tend to go back to psychology. I get this question, I get similar questions a lot on, you know, fear of missing out or chasing, or sometimes people book their profit too fast because they see they're in the money, or other times people don't take losses because they're afraid to take a loss at what could be the bottom. All that stuff is really psychological in nature, and if you could actually take a step back and the market was closed and you were looking at it and you were making decisions with a closed market on what you would do in this circumstance, with that ability to be more objective because the market's closed, you would more likely choose to do what is the right thing for the trade, right? So my biggest counter to anything that's psychological, where you hesitate or you couldn't pull the trigger or you book profit too early or you don't get out of your stop losses, the biggest thing is game planning, and specifically to have a game plan written down. I've gone over this before. I've actually got one of my notebooks here, but I've got like so many notebooks, because when I was a new trader, I used to actually, because my biggest weakness as a trader, by the way, has always been my ability to control my emotions. It's my biggest weakness as a trader, even to this day. I've improved on it dramatically. It's my biggest weakness as a trader. So for me to counter that, I would hand write out a game plan. And if I hand wrote out the game plan, if it was on the piece of paper, I had to follow it. And that was it. You did all the work. You did it when you were able to look at the market objectively because the market wasn't open yet. And now you got to execute. You got to execute it. You already did all the work. Just follow the game plan. Keep it as simple as that. If you can just follow your game plan consistently, then we won't have to worry about the psychological issues of hesitating to not get in when you made the game plan, or booking the profit too early because you see you're starting to make money, or not getting out where you should and losing more in a losing trade than you would otherwise, because it's literally all there written out in the game plan. You had a great idea for this S, you had your game plan, you wanted to start with a feeler, maybe you would have been able to add on Monday if you had that feeler, you didn't do it, but maybe if you actually had it written out, you would have been able to make the execution. So that would be my advice to you there. Rich here, how do you interpret Apple and the TLT price correcting today without the Qs? Yeah, so Rich, that was the biggest conundrum for me, for sure. Was I'm short the NASDAQ here, and part of it is I'm looking for mean reversion, which I've looked for in the past, sometimes successfully and sometimes not successfully over the last couple of months here, where this IWM has been relatively weak. I'm looking for the Qs to be a little bit weaker. I'm looking at this TLT, which broke down again, which means that interest rates go up. When interest rates go up, that tends to be worser for the NASDAQ. It tends to be better for the IWM, better for the XLF, better for energy trades, better for reopening reflation trades. Yet what we've seen in the past, especially including when the uptrend here initially broke earlier this month, is that the Q weakness, if you even want to call it that, the relative weakness in the NASDAQ, usually just means it goes up less than everything else and not actually goes down. And the conundrum to me was like, all right, I'm short this T-triple-Q. So if you're short the NASDAQ, what stocks are you keeping a really close eye on? Apple, Microsoft, Google, Amazon, Facebook, the mega cap tech companies that make up such a huge percentage of the weighting of the Qs. So I'm looking at Apple today, getting crushed here, and I'm like, all right, my Q short's about to really break down and pay me right as the IWM is holding up. So it should be like a perfect storm for me today, where my leveraged Q short pays me really well while my long positions are going up and going in my favor because of the relative strength in the IWM. And I couldn't get the pullback in the Qs. Apple couldn't break, the Qs couldn't break, and Apple did break, but the Qs couldn't break. The TLT did break, but the Qs couldn't break. Microsoft, this is gross, gap up, totally sold it. Qs, did the Qs ever even tick negative today at all? Like maybe by a few pennies at one point here around 1045. But for the most part, the NASDAQ almost never even ticked in negative territory. And I got Microsoft getting slaughtered. I got Apple getting slaughtered. Amazon was negative. Google, I know, held up a little bit better. Google was small green today, kind of going sideways. I know Facebook was strong early on in the day, so that kind of added to it a little bit. But I don't know. I don't know, Rich. That was one of the big surprises for me. Was like, I'm looking at TLT, I'm looking at Apple, and I was like, yeah, I timed this T-triple-Q short perfectly. I'm about to get paid in it. I'm using my 15-minute rule, so I'm not getting stopped out in the first 15 minutes of the day. Once the first 15 minutes of the day are over here, we had this inside 5 and down. Then I put my stop at the high, 144.41, and never got stopped out of it, but also never got the breakdown I was looking for either. So I don't directly know, Rich, but I can say that we've seen this happen in the past. Let's look at real quick. What was this big gap down day for TLT? It was August 6th. What did the Qs do on August 6th? Look at it. Interest rates were going up in a big way. Look what the Qs did. Nothing. No pullback at all. So it's not the first time we've seen it, though I don't have a solid explanation for it. On VLDR, I got called away and my stop never triggered, so I'm carrying overnight down about one. I'm sorry, I don't mean to laugh at you. I'm more laughing with you. I would never want to keep that position. VLDR's got some liquidity if you need to hit out. There's 1,100 shares on ARCA at $7.30, and there's a little bit of liquidity above that also. I don't like keeping swings, initiating swings, especially in this type of company, if I don't have a profit cushion on it. So if you're light and you want to just roll the dice a little bit, go for it, but just recognizing that it's definitely a little bit of a gamble. Sahil saying that you made some money in VLDR today, so I'm happy to hear that. So good job. I love, by the way, Sahil, that's awesome. When a trader makes money in a trade that really doesn't work, what's that a sign of? It's a sign of good game planning. For me, I in some ways, I almost love at the end of a trade that fails to be break even or to make a small amount of money. In some ways, I almost like that more than when I have a trade work perfectly that makes a ton of money. In some ways, not always. In most ways, I prefer just to make a lot of money. But in some ways, it's a really good feeling because it means that you executed well. It means that you game planned well. If you have a trade that does not work and you lose nothing or make money in it because you game planned well and executed well. So that's a great job. Interesting. Rich here providing us with Ricky providing us with a chart of S&P percentage of stocks over the 50 MA. So this is one of the things that we want to be paying attention to, generally for breadth, right? So deteriorating breadth is generally not a fantastic thing for markets, which has been one of the big kind of bear signals that people have been paying attention to, that we've been paying attention to over the course of the summer. The issue about it is, and this is why, and I've spoken about this a whole bunch of times, there are just so many stocks, even like this VLDR that happens to be up right now, there are so many stocks that are in a bear market with the S&P and the NASDAQ at all-time highs. It's crazy. But it's because breadth has been garbage. And historically, bad breadth leads to bad markets. We haven't seen any rollover from the S&P or the NASDAQ. It doesn't have to be that way, though. Sometimes the opposite happens. Sometimes it's the S&P and the NASDAQ are holding up so well, and eventually that breadth starts to catch up. Eventually all the stocks start to go. But historically, more times than not, bad breadth leads to a lower market than the opposite. But I have seen in my own career, I remember in 2015. So 2015, if you look at the S&P, 2015, if you look at the S&P with this one big blip in the summer of 2015, which I remember very well. Let me zoom in here. 2015 was, for the most part, like basically a really sideways market until that little summer blip down. Let's zoom in and take a look at it. So here's the market almost all year. And then we did have this one correction and almost like a mini flash crash on this day. I remember it so specifically, August 24th, 2015. So we just had the anniversary of this day yesterday. This day was insane. This was a really hard year. So what's this? We pulled back from 210 to 182 in 3 trading sessions, basically. So what's that? It's $30 down in a $200 market. So it's still not a bear market, right? A bear market's 20%, but the average stock in the S&P, I'm pretty sure, was down in excess of 30%. But yet the S&P never officially broke into a bear market during that year. and then was another big correction in the very beginning of 2016 here. This is January 2016. So I remember that really well. And then eventually what happens if I scroll out is then the bulls take over. Oh, I just got to go back to this. Eventually what happens in 2000, let's just go to a weekly chart so we can see it a little bit better. Eventually what happens after that correction, the beginning of 2016, that's right here, is the bull market takes over. So this was another example of a market that had bad breath. The average stock in the S&P, I'm pretty sure, was down something like 35%, but the S&P itself never broke into bear market territory, and eventually everything caught up, and obviously the market went, and here we are. Look at the difference in acceleration now that I have this weekly chart, paged out here a little bit, spaced out, where we're going back to 2013. Look at the difference of acceleration here in this market that we've seen over the course of the last year plus since the coronavirus bottom. It's really notably incredible. It's really notably incredible, and it's something that I am keeping in the back of my mind as well, is the degree of this move. At the same time as you've had this degree of the move, with the exception of the end of August, beginning of September of 2020, which, by the way, we called this move out here perfectly in the VTF when that happened. With the exception of this move right here, we didn't really ever get parabolic on the weekly chart, right? The uptrend, even though it's been massively accelerated here, has never really turned into a parabolic move on this weekly chart. As opposed to, you can see a couple of these more miniature parabolic moves that led to pullbacks, like the beginning of 2018. I remember this one really well. We went parabolic here in that January in a small way, and we pulled back. The beginning of 2020, we were kind of starting to go parabolic when coronavirus hit. The one I just referenced here, we were starting to go parabolic, and then we had a decent price correction from 358 or so in the SPYs down to 320. And now here we are, but this has been accelerated yet steady. So it's an interesting market environment. I am definitely keeping in the back of my head this rate of acceleration is just so much bigger than anything else that we've seen in the bull market going back to the financial crisis. Doesn't this financial crisis look like a blip on the radar, a stroll in the park, when you look at it from this perspective? Especially compared to, obviously, you probably would want to be looking at more of like a logarithmic chart at this point than just a pure price chart, because on a percentage basis, this right here is basically the same or very similar to this right here, though in a much shorter time frame. But it's so cool when you look back at these charts sometimes and just look at everything from give yourself a little perspective. Anyway, I'm going on a complete tangent, so let's get back to the questions here in the VTF. I got to scroll up and figure out where I was. From Rich here, how do you avoid over trading when you're a new trader? I traded win and VLDR and took off half and got stopped out of both to end up more or less flat. That's a great job. That's a great job. So it doesn't sound like over trading to me. Do you have any advice for novice traders who know how to scalp as well on choppy days? Okay, so first of all, the first part of what you're describing here is not over trading. You took a trade, you got your risk covered, you got stopped out, you lost nothing. And like I described earlier, that means that you had great game planning and you had great execution on your trades, because you had 2 failed trades where you lost nothing in it. So I love that. The thing about over trading, I struggled with it at points in my career in the past. I don't think I really do as a whole anymore. Though every once in a while I get in my own head a little bit, and I probably overtrade on like an individual day once in a while. But it's not a consistent issue for me at all. Though there's probably little periods of time in my career in the past where I was overtrading. I try my absolute best on a day-to-day basis to provide the team with guidance on this in the morning meeting. I try my absolute best to tell you guys every day, in my opinion, today is a day where there's a ton of opportunity. We got to be really aggressive. We should be trading really heavily, because the only way that we're going to be able to capture that opportunity, or the opposite. Guys, today, for this reason and this reason and this reason, there's not a lot of opportunity. It's a less is more type of trading session. We got to be hands off. What did I say today? I said today is a less is more day, and I laid out the reasons why in the morning meeting. If I'm saying that today is a less is more day, it means that you got to know to sit on your hands a little bit more and not allow yourself to overtrade. In particular, I was actually running some statistics that are worth mentioning to you guys about the team's trading as a whole. You guys are losing more money than you should be in the middle of the day. You guys are trading more than you should be between those hours of 11 and 2. If you've watched my probability class, one of the layers of probability is time of day. The worst time of day to trade that has the lowest probability is between 11 and 2. I'm not saying don't trade between 11 and 2. There was actually a great Palantir short today, which I think was in that time frame because news came out. Pat posted it in the VTF. Look, it's 1 o'clock. I actually tried to hit the bid at 24.73. I was a little bit slow. I missed it, and then I didn't want to pay into the 60s to get stock, so I never actually shorted it. But Palantir got hit with that news about the hack, and for a lot of these companies, I don't think it matters too much if they get hacked or have a security breach. But Palantir, it's literally their business to be making sure that companies don't have security breaches, and then they themselves get a security breach. So it's like, oh, that's bad news. I typed it up as fast as I could. I looked at 24.73. I kind of hesitated for a moment. That was the inside bid. And by the time I went to go hit that inside bid was like 24.60, and I didn't want to pay down the extra 13 cents because I was going to have to give my risk all the way to 25.08. That's a 1 p.m. trade that's worth taking. There's an event that's occurring here. There's news that's going on. And there is also such thing as a midday reversal. We see that sometimes. The market trends all the way down for the first half of the day, and then it's like 12:05, and that hammer comes in, and then we trend up for the second half of the day. That is also a thing. But overall, especially in the summer, trading between 11 and 2 is not really your friend. What I'm doing between those hours is almost entirely position management. A little bit of that kind of back and forth cash flow stuff that I was going over with you guys in the afternoon meeting yesterday. I do some of that midday just to take advantage of midday ranges for a little bit of cash flow, and that's it. But the statistics are showing actually that as a team, as a group overall, we're losing P&L midday trading and over trading midday. So definitely need you guys to really be selective there midday. And again, if I can give myself a compliment, I'm usually pretty good at being fairly on point in terms of providing the feedback on if it's a day where we should be aggressive with our trading or if it's a day that we should be passive. And like I said this morning, today is a less is more type of trading day. If it's a less is more type of trading day, it means you really got to pick your spots. You really got to be selective. You really want to be trading these uncorrelated names. And you can't be sitting here just pressing the buttons all day, which I know is what we want to do because we're traders. We want to sit here and press the buttons. But guys, there's other things that you can do in the day. There's other research you can be doing. There's so much online that you can go to. There's so many websites and blogs and things like that that you could be reviewing midday for your research that can help make you a better trader than sitting here at 12:15 and buying and selling and buying and selling and buying and selling and just wasting money because you're bored. So let's not do that. Hopefully that helps some people out. Tian Hao asking if I should short TSM. I don't like to trade Taiwan Semiconductors. Let me start by saying that because it's kind of an ADR. I do like the company. So from a fundamental perspective, I would not want to be short. You do have a little bit of a resistance level here at 120, and it's extended into 120. I think it was trading on earnings today. So I don't really see a reason to short it right now. Yeah, you got a little bit of a doji on the earnings day today that was on high volume with a little bit of extension. Not a stock I like to trade a lot. And also, like I've been consistently saying for a year here, what's easier in this market right now, guys? Let me just type up the SPYs and leave up this chart of the SPYs. Is it easier to short and make money, or is it and think, I don't care what stock, close your eyes. Don't think about any particular stock or any particular bias you have. Is it easier to make money right now short, or is it easier to make money right now long? Everyone is saying long. I can't hear you, but I know you're saying it. So that's where we want to be more focused right now. The long setups are the easier money than the short setups. Scrolling down here from Brian. You think Chinese stock, Shady, Baba, Billy, and others should continue to run? I think they should. Will they? You know, the thing about it, and this is what I've said the last 2 days now, is we got the retracement. You know, a little bit less so in Baba than some of the others. You know, Baidu got back to the 21 EMA. JD significantly above the moving averages and kind of gave some continuation. It's kind of a beautiful thing here. Billy, I don't like as much, but it's sitting here into the 21 EMA. So these stocks have all given their technical retracement. So in reality, if you were coming in and buying any of these lows, like we were, like in Baba as an example, if you were buying any of these lows, and all you can really expect is the retracement to equilibrium, and you got it. So can we expect these stocks to continue? And the answer is really yes and no at the same time. I'll tell you why. The no part of the answer is because the market's in a downtrend. And a great rule in trading is assume the trend will continue forever. It won't continue forever, but if you assume that the trend will continue forever, it's going to be a much easier thing than trying to pick tops and bottoms in the market. So assume that trends will last forever until they prove to you that they've broken the trend. That's on the one. The flip side is, like we've spoken about, I got a thesis on these companies. I think they're great companies. So the question I'm asking myself right now as I'm long Alibaba is, can the retracement higher for this stock and for the other Chinese names become a reversal? Retracements become reversals through a process. That process, and there's a couple of ways in which it can happen. I'm not going to get into all the different ways right now, but there's a process by which a stock goes from a pattern of lower highs and lower lows to higher highs and higher lows. And it's exactly that. It's a process. It literally, by definition, cannot happen in 1 or 2 trading sessions. Because you have to build out. You have to go from lower highs and lower lows, then you have to have a high, and then you have to have a lower high, a higher low, and then you have to have a higher high. And it's only when you have both the confirmed higher high and, both the confirmed higher low and the confirmed higher high do you actually have a reversal in the market, where then you can count on higher prices because now you're with the trend. So on the one hand, no, we shouldn't count on it. On the other hand, I've got a fundamental thesis where I really like these things, so I'm biased. So the bias is making me look for the retracement to become a reversal. I didn't trade a single share of Alibaba today. I traded a little bit of Alibaba yesterday, which is really more profit taking into the gap up than anything else. Because now I'm watching. I booked all my profit. I got all the profit I want to book, I've basically booked. I've got a great price. I want to see if this retracement can become a reversal, and then you can have the technical confirmation that we can expect a continued run higher in them. Rowan is asking me to repeat something, but I don't know what he wanted me to repeat.
No, this guy explained it.
Okay. Looks like Lee took care of it. From Busta Rhymes. I like the name. Busta Rhymes. I keep getting stopped out of the meme stocks like GME and AMC. How do you manage your stop loss for such a huge movements and pullbacks without getting shaken out? Okay. Hard to answer your question without knowing a little bit more information, such as what time frame you're looking at. Are you looking at a 5-minute chart? Are you looking at a 15-minute chart? Are you looking at a daily chart? What you got to recognize, here's a great rule that I haven't had to say because it has not been applying to the market. So I haven't had to say this one in a while, but it does apply to certain individual stocks. As volatility increases, what'd you say? 1 minute chart. Okay, that's a problem. We can talk about that too. So first of all, as a great general rule, as volatility increases, you want to have less size and more space. Meaning, let's say you want to risk $100 on a trade. You could buy 1,000 shares and risk 10 cents. It's $100. You could buy 100 shares and you could risk $1. That's $100. It's the same $100. As volatility increases, you generally want to have more of the risk space and less of the tier size. Because otherwise you're going to be getting stopped out of things because you're not giving things the appropriate amount of room. That's one. Two, I hate 1 minute charts. I don't even have access. If you were like, hey Derek, can you look at 10:45 today on a 1 minute chart? the answer would be no, I can't, because I literally don't even have access to a 1 minute chart. I have access here to a 2 minute chart that I never look at, almost never look at. I'll look at this 2 minute chart every once in a while if I just need to reference what like an absolute high price was because I took my eyes off the tape. I don't look at 1 minute charts or 2 minute charts because honestly at that point you're better off tape reading. And I'm not a big advocate of tape reading, even though I'm good at it. I'm not an advocate of tape reading. We discussed this in an afternoon meeting recently because the level 2 and the tape they're just much more manipulated than they ever have been in the past. You really want to learn charts, but the problem with these small time frames is that they're too tight. You're going to get shaken out of positions, which is basically what you're describing. You're going to get shaken out of positions all the time, and you're going to see all these false signals. You need to be looking at different time frames, and you need to be looking at those different time frames in conjunction with one another. You should be looking at a 5, a 15, and a daily at a minimum, all at the same time to see if you have confirmation on all the time frames at once. If you have confirmation on all those time frames at once, you're going to have a higher probability of success and a better risk reward. I just think a 1 minute chart, the time frame is too small. You're going to be getting shaken out on this stuff, especially in these names that are super volatile. So you got to take, again, more space, less size for the amount that you want to risk. It'll probably immediately lead to better results, would be what I would guess. Busta Rhymes, I hope it helps. Love the name. Scrolling down here in the VTF. Buzz, my man Buzz. No problem. Any thoughts on DKS? Yeah, I mean, the DKS earnings report was incredible. I thought that they gapped this thing up a lot. There was some chatter on this in the VTF into this pullback, and I was like, yeah, you know, it should pivot here into this ADMA, but I didn't want to be involved in it because what I said was I said that even though it's gapped up huge, I don't think it's going to make a new high on the day, and I think that what's going to end up happening is that this thing is just going to end up consolidating and going sideways. Happened to be that was exactly correct. I definitely could have been wrong on that. The DKS earnings report was excellent. It is up huge. These retail companies tend to not be momentum names, though. You look at Macy's, and there's been massive momentum in Macy's over the course of the last 4 trading sessions. This DKS is up so big. It's not a great looking daily candle today. I think it just needs time. Let's see how this thing sets up over the course of the next few days. Does this thing pull back deeper into this gap as this ADMA catches up? Does it try to build out more of a consolidation pattern like what Snap did on its earnings report, where it just consolidated here for a while? Let's see what the picture on DKS looks like in a couple of days when we can have more technical information outside of the fact that the earnings report itself was excellent. Once again, I have no idea what my buddy Rowan is saying. Something about the gym. Guys, please, with the jokes in the VTF, I can't even repeat that one. I don't have that flow diver because I went over a little bit in yesterday's afternoon meeting. The problem with kind of the way that I trade in some of those circumstances and why I don't go over it in detail that much is because what I'm really trying to do here in afternoon meetings, so we try to make the afternoon meetings as educational as possible. It's obviously a review of what the market did that day with a focus towards education, so we can all be, you know, learning on a day-to-day basis. The morning meeting is really more about the idea generation, game planning, things of that nature, and afternoon meeting is where we improve as a team. The information I'm trying to provide in afternoon meetings is information that I want to be ubiquitous. I want it to be things that can positively affect traders in the group regardless of their background or account size. So I've got guys here who are part of our virtual trading floor who've got decades of experience and are dealing with, you know, multi-million-dollar accounts. And I've got other guys here in the virtual trading floor who are dealing with, you know, $10,000 accounts and they just graduated college recently. So there's certain things that I do because I have big P&L swings. I'm dealing with a bigger account size at this point in my career that I couldn't have done when I was a newer trader and that aren't necessarily correct for everyone in the group. So, you know, I'm trying to provide the information as best as I can to help everyone to be able to improve on a day-to-day basis in a way that positively affects everyone. So I'm probably not going to have a class on that, but you know, I got no problem answering questions about it, clarifying questions in an afternoon meeting like I did yesterday, kind of when I went over in a little bit more detail. Steven is asking if I can look at Burke B. Sure, I haven't looked at Burke B in a while, actually. How's my man Warren doing? I had the opportunity to spend a night in Omaha, Nebraska on my drive back from Idaho, and it was a pretty cool town. I liked it. I got to go into this, I don't know, really cool happening downtown area where there was a lot of live music and stuff. It was like a couple really cool blocks in there. Anyway, my man Warren, it looks like he's doing okay because Burke here is near all-time highs, like the market is, which makes sense. It's also kind of been dead money, though. You know, this thing has been dead money here really since April. It's been in a large consolidation. Can it break out? Can it start to go again? Absolutely. I would say pay attention to 290 and see if this thing can start to wake up again after a multi-month consolidation. The thing about these multi-month consolidations is they can go for a long time, you know, and you don't know when they're going to break. Like if you look at Amazon. Look, Amazon's been in a consolidation since July 2020. Had one failed breakout, and you know, finally attempted to break out here in July, and then the earnings report happened that just brought it right back into its range. So basically, with one failed breakout, Amazon has been range bound for over a year. So that's the problem with these stocks sometimes, is we don't know when they're going to go. We pay attention to them for signals. So when Amazon was actually breaking here, we were getting involved, right? That's when we were looking at it. Oh, finally, you know, Amazon's breaking out of a year-long consolidation. The volume's there. Like, all the things we're looking for are there. It's actually, look at this. This is a breakaway gap. It's beautiful. So yeah, so Burke B, you know, it's being pretty quiet right now, but definitely worth keeping an eye on if it starts, you know, waking up with appropriate volume, a breakaway gap, or something like that. Why don't you draw trend lines or support or resistance in your charts? Do you have them in your mind or something like that? Sure. So I as far as support and resistance lines go, I don't draw them. I can just see them in the chart. I see the chart itself is showing me the line. I don't need to see it. As far as trend lines go, I'm actually not a big believer. I pay attention to it. I mean, we literally were just looking at the trend line on the weekly chart on the S&P. We're talking about the accelerated uptrend that this thing has been in. So I pay attention to it, but I am actually more of a stickler for definitions. It's my definitions. My entire trading system, if you will, hinges on 3 very basic definitions. The definition of trade, the definition of trend, and the definition of momentum. A trade is something with a technical reason and a technical out. A trend is a pattern of higher highs and higher lows, or lower highs and lower lows. And momentum means the greater the price, the greater the demand. If you really break down the essence of everything I do, it comes down to those 3 definitions. So what is a trend? A trend is a pattern of higher highs and higher lows. My issue with drawing trend lines, which is what I call, somewhat sarcastically, I call it the connect the dots game. Like a little, you guys ever play when you're a little kid, you know, you got the little color by numbers, and then you got the one where you connect the dots and it makes like a nice picture of Santa Claus or something like that. I don't actually do that, because just because something is breaking above or below a trend line that you actually drew into a chart does not mean that it's actually breaking the trend. So it's something to pay attention to, because a lot of times the breaking of the trend lines is a self-fulfilling prophecy that actually leads to the break of an actual trend. But breaking a trend line does not break a trend. I just want to make that very clear. Just because it got below the line that you drew does not mean that it broke the pattern of higher highs and higher lows. And to me, that's actually significantly more important. So do I pay attention to all things related to technical analysis? Yes, but it's literally like I just said earlier on in today's meeting. Right in the beginning of today's meeting, I spoke about technical analysis is not about chart pattern recognition. Sure, it's a piece of the puzzle. You got to know what a bull flag looks like. You got to know what a head and shoulders looks like. But you got to understand the supply and demand dynamics of the actual chart pattern that you're looking at, or the actual trend that you're looking at, within the confines of all of the other information that actually exists at that time in order to actually be successful. Because I promise, you could go buy yourself a textbook on what chart patterns look like, and it will benefit you as a trader, but that information in and of itself will not make you successful in this business. So that would be my answer to your question there. All right, so last question of the day here is going to be from Enrique. Any thoughts on OCGN? Why do I know this name? OCGN. Were we trading this name in the past? Have I traded this name in the past? I probably have. It definitely rings a bell. Oh yeah, I think I did almost get stuck in this long once or something like that. I was able to trade my way out of it. I don't really have an opinion on this OCGN. It can't get below this big support of $6. It's obviously it's a ways away from that. If you get below that, it's garbage. $9 is your next big resistance level. It's stuck in the middle of it. I don't know anything about the company, so I can't give you any fundamental thoughts on it. Technically here, the technicals look very neutral to me. So I have neither a technical nor a fundamental bias that I can provide to you on OCGN, unfortunately. And Rich here was kind enough to post the definition of the 3 key definitions. All right, gang. Let's call it for today. I gotta get some sleep. I hope everybody had a good day today. I hope everybody was managing their risk, picking their spots. I was able to eke out, a small positive day for myself, but that's after 2 bigger positive days in a row yesterday. So week's off to a good start. Let's keep up this momentum into tomorrow morning when we'll have our morning meeting at 9 a.m. For people who are just tuning in on YouTube who are not a part of the team, get a part of the team. Reach out to info@t3live.com and inquire about the ProDesk virtual trading floor. All right, gang. See you tomorrow.